In this video, we're diving deep into an exciting and powerful concept in the world of binary options trading, and that is order blocks. If you've never heard of them or you're not quite sure what they are, don't worry, you've clicked on the right video, because today I'll be breaking down exactly what order blocks are, how they form, and why they matter in the markets. I will also show you how to identify and mark them on your charts, step by step. Whether you're a complete beginner or just looking to sharpen your strategy, you're going to walk away with some real value today. Understanding order blocks is crucial because it gives you insight into where the big players like the banks, institutions, and hedge funds are placing their orders. If you can learn to spot these areas and use them correctly, order blocks can become a powerful tool in your strategy, helping you time your entries with more precision and increasing your overall edge in the market. And as always, I'll keep things simple and easy to understand with clear explanations and real chart examples. So if you're ready to level up your trading and learn something new, then I think it's time to get into it. Before we jump into the markets, I'm going to squeeze in a quick promo here. If you are struggling in the binary options markets and want to learn how to become consistently profitable, I've got something for you. I run a free Telegram group with over 600 members where I share profitable signals with a win rate above 75%, along with valuable insights to improve your trading. It's completely free to join, and if it's not for you, you can leave at any time. The link is in the description below, so definitely go and check it out. So let's get into what an order block is. An order block is a zone or an area where banks and big institutions place large orders. We're talking about the big players, the ones who really move the market. Order blocks are essentially key zones on the chart where price could strongly react or reverse from. And the great thing about them is the fact that you can spot them across all time frames, ranging from the 5-second time frame all the way up to the daily time frame. Now, order blocks can either be bullish or bearish, and knowing how to identify them properly is key. Being able to tell the difference between high probability and low probability order blocks is what really separates a skilled trader from the rest. Understanding this gives you a powerful edge, because with that insight you'll start to recognize where banks and institutions are placing their major orders. And once you can spot those zones, you'll have a clear idea of where the market is likely headed next. Alright, let's kick things off by looking at an example of a bullish order block. In this setup, you'll see that market structure is bullish, forming higher highs and higher lows, making it an ideal environment to look for bullish order blocks. And right here, you can see a strong push to the upside with several consecutive green candles driving the price higher. In this move to the upside, it's clear bulls are in control. Buyers are dominant in this push with multiple bullish engulfing candles and barely any red candles in sight. Now this last red candle, right before that strong upward move, is exactly where we'll place the order block. When it comes to physically marking out the order block, I recommend using a rectangle, and we're only highlighting the body of the candle and not the wicks. This zone that we just marked out is a high probability area for price to pull back to, because major players like banks, hedge funds, and institutions have their orders sitting here. So price will most likely drop to this level to fill those orders at a discount. And as you can see here, after that strong upward move, price pulled back into the order block we marked out here, taking out the orders from the major market players before pushing back up again. So this pullback into the order block right here was a solid buying opportunity, because as you can see, the price continued pushing back up. So yeah, that's pretty much the bullish order block in a nutshell. Now you know what it is, how it works, and how to identify and mark it on your charts. We just covered the bullish order block. So next up, we're going to take a look at the bearish order block. In this example, market structure is clearly bearish. We're in a long-term downtrend with price forming lower lows and lower highs. Now here you'll see quite a significant drop with several red candles pushing the price down. In this drop to the downside, it's clear bears are in control, with price being pushed down aggressively by these bearish engulfing candles with very few green candles in between. So in this situation, the market will eventually pull back before continuing to move back down. So we're looking for a high probability area where the price might retrace to, and that's exactly where we identify and mark out our order block. Now this last green candle right before the strong bearish move with these red consecutive candles is where we will mark the order block. In this case, the body of the green candle represents the order block, so we'll highlight it with a rectangle. This area that we just marked out is a high probability zone for price to pull back to, because the big market movers have orders placed here. So the price will most likely move up to this area to fill those orders at a discount. And as you can see here, after that sharp drop, price retraced back into the order block, clearly filling the orders of the major market players before continuing its move downward. Clearly, the pullback followed by a push into the order block right here was the perfect opportunity to look for sells. Yeah, so that's basically the bearish order block explained in a nutshell. Now you understand what it is, how it works, and how to spot and mark it on your charts. Now when physically trading bullish and bearish order blocks, you'll be able to identify them on any time frame and any asset. And I strongly advise that you only trade bearish order blocks in bearish market conditions, and you should only trade bullish order blocks in bullish market conditions. But yeah, that's ultimately how you identify and trade using order blocks. I definitely recommend incorporating order blocks into your trading. It's an incredibly effective tool to add to your system. That said, I wouldn't rely on them alone to make trading decisions. Personally, I use order blocks every day as part of my approach, but they're just one of several confluences I look for when analyzing the charts. This was a simple and straightforward video covering the basics of order blocks, what they are, why they matter, how they work, and how you can use them in your daily trading. We kept it focused on what truly matters, just the essentials you need to get started. Order blocks go a lot deeper than most people realize. There's more to them, and that's where things can get a little bit technical and complex when you start focusing on the finer details. I mean, it can get overwhelming. So I won't be diving into that in this video. Now, if you want to learn more and dive deeper into the topic of order blocks, feel free to do your own research. There are plenty of free websites and videos out there that explain everything you need to know. But otherwise, I hope you guys enjoyed the video and more importantly, learned something new today. And if you did, go ahead and smash a like on the video and subscribe to the channel if you are new. And I will see you in the next video.